Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a Forex quick click. I'm going to take a look at the Aussie versus US dollar as we head into the end of this trading week and look forward to next trading week. What levels are in play? What is the bias? Where what would turn the bias around? I'm going to go through all that in this video, so let's get started. I'm going to start by taking a look at the 4-hour chart and look at the price action we saw in trading this week. The initial move was to the upside in trading ahead of the U.S. election. That move to the upside took the price right up to the 50% retracement of this move up from the August low to the high price that we saw in September. Holding that 50% kept the sellers more in control. We also was able to get above the 100 bar moving average here on the 4-hour chart, but not by much before the price started to rotate to the downside. We had the U.S. election results start to come out, and the dollar got stronger, sending the Aussie versus U.S. dollar sharply to the downside. We fell below the 61.8% retracement of that same move to the upside. We also fell below other swing levels, including this low going back to here, including this low right through here for the low from last week. And we moved down toward this low right here before finding support buyers and trading again after the U.S. election results. And trading yesterday, we started to correct back higher, and that move to the upside moved above the 100 bar moving average on the 4-hour chart. Also, in this area is the 200-day moving average. I failed to talk about that, but that 200-day moving average comes right here. This area also was defined by different swing levels going back in time. So it's a key level coming into this week. It was a key level going out of this week as well. And as long as the price remains below this area in trading going into the new trading week, I'm going to say the bias remains more to the downside. So the first thing that we can learn from this this week is that this area right here is now resistance going forward. Be aware, be prepared. As long as the price remains below, it's more bearish. Now, the price did extend to the upside, and in that move to the upside in trading yesterday, the price moved within about 3 pips of the 100-day moving average. That's the blue line in this chart. And if the price next week were able to get above this swing area right here, and maybe even the 50% retracement as well, the 100-day moving or the 100-day moving average up here at 0.6690 would be another target. So with all that known, this is the path to the upside if this area can be broken. If it can't be broken, the sellers remain more in control. And on the downside, we have a number of different targets to get to and through from our recent history, including the 61.8% retracement, this swing low from here, this swing low from last week's trading, and the swing lows from back here and from this week's trading right through here. All those levels need to be broken to the downside to increase the bearish bias. If we are able to do that, then we open up the door for further selling pressure with the potential of heading all the way back down to the 0.6348 level, which was the low price from the selling when we had the carry trade unwind on August 5th that forced the New Zealand sharply to the downside. So overall, what do we know? Well, we know that resistance going into the new week is going to be right here. We know that as long as the price remains below the level, the bias remains to the downside, and then we start ticking off the different low prices or swing low levels that we had going back in time to increase the bearish bias. Conversely, if we move above this swing area right here, the 50% retracement, 100-day moving average, and then probably this 38.2 and 200 bar moving average in the 4-hour chart become targets on the top side to get to and through. That's my look at the Aussie versus US dollar as we head into the new trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.